Pressley is now recognized.
Thank you. Earlier this year, we witnessed three of the largest bank failures in U.S. history. Direct consequence of Republican deregulation in 2018, which weakened bank regulations by exempting banks like SVB from enhanced stress testing and stringent capital requirements. As has been proven, the Republicans' opposition to regulation comes at the expense of economic stability for working families. And now they are doubling down on their prior mistakes, despite the harm that we saw just a few months ago ripple across our economy, especially in my district, the Massachusetts 7th. When SVB collapsed, small businesses in my district couldn't accept payments. Affordable housing development was slowed, that was suddenly in jeopardy, and tech companies couldn't make payroll. Ms. Philo, when banks lack sufficient capital, who bears the brunt of the cost when there is a financial crisis?
Thank you very much, Congresswoman Pressley. Research shows that financial crises are hugely costly and have a disproportionate impact on Black and Brown communities, Black and Latinx communities, and businesses, and rural and other underserved communities. The 2008 crisis cost $2.6 trillion, and the set of capital reforms in these proposals are really essential to prevent that large-scale boom and bust of financial cycles that we found ourselves historically, and that hurt all Americans and businesses, but disproportionately reduced the wealth and the access to credit for communities of color, rural and other underserved communities and businesses. Thank you.
No, thank you. And adding insult to injury, and we've seen this happen time and time again, SVB's CEO was paid millions of dollars ostensibly for being incompetent, rewarded for the harm that they caused. And every time banking regulators try to increase capital requirements, we hear this misleading corporate rhetoric like that of Jamie Dimon, who said that these proposed capital requirements are bad for America. And I'm really quite tired of it. So let's set the record straight here today. Ms. Philo, isn't it true that better capitalized banks are able to lend more even during periods of stress?
Thank you very much. Yes, a bank can use capital to make more loans. Many bank executives in the bank lobby claim that increased capital requirements will undermine credit availability. We strongly disagree that increased capital requirements will undermine credit availability. Indeed, well-capitalized and secure banks are essential to providing credit to businesses, families, and communities. A 2020 World Bank report summarized several studies that found that well-capitalized banks in the U.S. had higher loan growth than nearby banks with fewer capital reserves, that well-capitalized large U.S. banks had higher loan originations and liquidity, and that better capitalized international banks had lower funding costs that enabled them to increase lending. I recognize there are studies that say a lot of different things, but I found this to be credible, and I appreciate the time.
And similarly, some banks believe that this rule will slow down the U.S. economy, but do you believe that this will be the case given that implementation will be gradual and occur over years?
I recognize the question, and yet I do believe that these proposals will not slow down the economy. Their proposals make the long implementation and the gradual phase-in explicit, and I believe that that is the intention there, to mitigate those impacts. So I do not believe that it will be an overarching issue.
Thank you. The benefits of higher capital requirements are clear. They will enhance bank resilience and secure more stable lending in our economy. We've seen 3 bank failures this year, and this rule is necessary to strengthen our financial system so that it can weather future crises. The American people are paying close attention. If Republicans continue to oppose common sense regulations in our banking industry, we know who will suffer, and we know exactly who to hold accountable. Thank you. I yield.
Gentlelady yields back. Chairman Barr has allowed